Hey, happy CPI everyone. I hope you're all doing fine and well. So yesterday, as we all know, or maybe for some of you that doesn't know, today we had the CPI in the United States released, and it was all growing, as you can see right here. That means we had a alter number for inflation. Okay, inflation came altered than expected. The core CPI month on month was anticipated or forecasted to be zero point 0.1 higher than previous. But right here, you can see it was 0.4%. The actual was 0.4%, meaning that it came higher than expected. It came by 0.1%, going through by 0.1%. The CPI month on month was increased by 0.2%. Okay, whereas the market was forecasting it to even grow by 0.1% from the previous, which was the data that came out in January. And lastly, the CPI year on year also came higher than expected, which is by 0.1 as well. The market was forecasting the CPI year on year to be the same, all right, to be the same, to remain the same by at 2.9%. But right here, you can see the actual was what was 3%. Now, another thing that I want us to pay close attention to, because the list of things that impacted the market today was quite interesting. It was a long list. Okay, the first one was the CPI data that came out around 2:30. They were very good. The market spent the first hour, but the first 2 hours after the data to really make a very interesting move. And then the Fed chairman Powell started talking, okay, and Trump also get on set started talking about. Let's even look at what Trump said. So this is what Trump said. Trump said interest rates should be lowered, something which would go hand in hand with upcoming tariffs. He is trying to sell his own tariff, not because of any other thing. In my own opinion, okay, in my own personal opinion, this is what he treated. Okay, interest rates should be lowered, should be lowered. Something, let's rock and roll, America. This is very weird, but I mean, it's President Trump. He gets to do whatever he wants. He gets to say whatever he wants. All right, that's I think that's one of the things that makes you president in the United States. You get to do whatever you like. Okay, I'm just kidding, but I mean, what is the meaning of let's rock and roll, America? It's fun, right? You know, it's an entertainer. Trump is an entertainer, and he really knows how to get that done. All right, but the other thing that makes the market quite jiggy, okay, that kind of moved the market a little bit was Fed Chairman Powell testified as well. He was quite not certain on his own stand as far as the economy is concerned. I can't really see whether I want to show you what he was saying, because I don't want to just say it out of my head. Well, even coming back to what we have right here, we are expected to have a stronger dollar. So mind you, let's come to the economic heat map right here. Mind you can see right now, okay, right here now, it signals that we are getting into a danger zone of bearishness in the United States dollar, right? Because we're already saying the CPI year on year came higher than expected by 0.1%. The core CPI month on month came higher than expected by 0.2%. And the which other one? Okay, that's more like it. Okay, the other one that was not included was the CPI month on month. That's the always same thing as called CPI. Okay, just like a sideline sort of. So literally, that is what we have right here. And then, mind you, we've already had NFP that came shorter than expected, although the revision actually kind of helped that up. But at the end of the day, we still had a shorter than expected data released on Friday last week. Unemployment rate was good, okay? And then the unemployment rate, which was released last week, another one is coming tomorrow, Thursday. So you should look forward to that. Okay, the unemployment claim wasn't that good last week as well. The ADP was very good, and the job opening was not very good. The yield is also going down gradually, which kind of like signal what the interest rate might look like in the next Fed meeting. So literally, in my personal opinion, again, I think we're getting some very, 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 very conflicting data. I still don't want to lean towards bearish yet, because I'm still holding some buy trade on dollar. All right, some dollar based pay. I'm still holding the buy trade. But at the end of the day, it's not what I holding. It's more like what the market is doing. And with what I'm saying right now, it's not looking very good again. Just so you know. So now, in my previous video, someone kind of like commented and said I talk more on the fundamentals. I don't really explain technicals. If I start explaining technicals and what the reason why I took a trade or I'm in a trade, I'm gonna spend so much time that you and I don't really have. So, but at the end of the day, you can see the whole thing is actually set up properly. And personally, I'm more like a supply and demand kind of guy. Okay, I trade demand, I trade supply. I buy breakout and pullback stuff like that. I use Fibonacci, I use trend line. Just the old stuff, the old trend trading strategy. That's more like what I do, support resistance, stuff like that. Okay, nothing too fancy, nothing too faster like we people do trade nowadays. Okay, so that is just my kind of a move. So now looking at the chart right now, we can still see that dollar index is sitting above 107. I keep saying this. Okay, until I see a break below here, I'm still gonna look for buy. All right. Although right now I'm really taking the whole thing slow because of the fundamental is not looking so pretty again. So I'm taking everything very, very slow right now to make sure I don't overly expose myself to dollar just to have myself angry. All right. And another thing that I started doing is that I started diversifying. I started picking some some minor pairs like Euro Aussie. I started dazzling into silver. Okay, I took a silver trade. I couldn't join gold because it's already way at the top. It couldn't come to my area of interest, so I kind of shut that off. So let's start with USDCHF. Okay. So looking at USDCHF right here, you can see the trade I have is still going pretty well. All right, it didn't really pull back that crazy like the other days today after the CPI data was released. All right, so yeah, I'm still holding on to this trade. It looks really good. The profit is still there. All right, so then that leads me to going into the next pair. So right here we have silver. Silver is the trade I was talking about that too. Okay, this one right here, the first entry already closed me out at right here, okay, around $75 profit, like I said earlier. All right, so once I got this new pullback, I took another buy right here, and that one seems to be going very well right now. Right, go ahead and check my result. I think the trade should be running in around $70-$80 thereabout. Yes, okay, $57. I'm gonna share that with you later. Okay, so the trade is running $57 and it's quite good, right? So that's a trade on silver, and then I have another trade on Euro Aussie that I'm holding right now. Okay, Euro Aussie pulled back very nicely all the way to the upside right here. You can see my Fibonacci. It went all the way up to 38.2 Fibonacci, and then it also came to retesting the broken structure right here, this particular structure. Okay, we went back to retesting it successfully. So this previous support is now being used as resistance right here, which kind of gave me a signal to do what, to join the short position. And at some point on Edge Finder, the top setup, I saw Euro Aussie reading -5, which is reading bearish. So that's another reason why I kind of went for this trade. So the trade is still very young. In my last video, I said I'm going to take the trade, and here I am with the trade. So let's see how this goes. Pound dollar is another trade that went really well when the data was released, and a few minutes after it went quite terrible. Okay, so that was another one. Okay, I'm still holding a short trade on pound because the United Kingdom economy is not doing so well right now. Okay, I mean, we can all testify to that, and I'm going to share the chart, the UK economic heat map with you as time goes on. So right now I'm still holding this short position on pound dollar. Like I said, I took a trade right here, and the second one was right at the top here. So they're both still running very nicely, and that is that. Euro dollar is another one that kind of tapped me out at almost break even, and the second one I took before the NFP. Before the CPI today seems to be in a drawdown because of the crazy jumpiness of the market that happened today. You can see right here, this is where this particular trade is. So this is the only one. I think this is one of the trades that I'm still holding that is kind of like in an indecisive mode. Okay, and it's not looking very pretty like I always do, like I want it to look. All right. So, anyways, Euro dollar is in the middle of drawdown right now. So I'm holding on to it, and I'll let you know how it goes. So about the UK economic heat map, this is what I'm looking at right here. You can see we have quite a few green, or excuse me, a few blue, and then we have so much of red right here, meaning that we have the GDP is slimming down. The manufacturing PMI is also, in my personal opinion, it's bearish, it's low because it's below 50. Okay, the service PMI, the previous was dropped by 0.4 point, which is from 51.2 to 50.8, which is not very good. The retail sales month on month is also coming down gradually. People are not buying stuff. I guess people are putting their money in their pocket right now in the United Kingdom. Inflation rate also kind of dropped down, which is not very, very good for the currency. It's good for the economy. The same thing that happened in the United States. All the data that came today was good for the economy, for the currency, but it is not good for the economy. And that's why we saw the pump and dump. Okay, the PPI year on year also is not good. Okay, the unemployment rate is going higher in the United Kingdom, which is not good. The interest rate came just as expected, so we had a flat one on that. So overall, we see that the United Kingdom economy is still not very pretty, and that is that on that. So moving on to the next trade I want to share with you, which is CAD JPY. Okay, so right here on CAD JPY, I took a short trade also. It was an early short trade, I would say, because on the 4-hour time frame where I took the trade, there was some price action a candlestick pattern right at the top there that kind of took me into this trade. But as it stands now, it seems like the market has something as planned. My stop loss is still right above here, very close to the 100% Fibonacci. I would like to see how this goes. And on the Edge Finder top setup right here, you will see that we have around negative 9%, very bearish reading on candle price. So even if this trade ends up closing me out, okay, if it ends up closing me out, I will still look for a possible entry, possible short entry, until we have a much decent break above this zone right here. That's when and only when I will start looking for what to buy opportunity right. Okay, anything below here, I will still be looking for a short opportunity, in my own opinion. Don't forget this is the daily time frame, and as a swing trader, that is where I thrive. Okay, sometimes it works, sometimes it doesn't. But when it does work very well, you get a very decent profit out of the trade. All right, and then that is more like it for me today. Okay, I don't really have much. I just want to share what I have with you. Like I said, I'm a swing trader. Sometimes my trade lasts for 2 weeks, 3 weeks. So all I can do is just to report to you to let you know how it's going, and that's what I did. So if you enjoyed this video, don't forget to subscribe to my YouTube channel. Don't forget to like the video. Don't forget to follow me on my socials. I will see you in the next one. Have a good day. Bye for now.